Hello, my name is Luis, and my wife and I have been helping people get licensed in the life insurance space since 2010. In 2019, when she took over licensing, she started implementing best practices, and we only had 3 people not pass the exam on the first go. In this video, we're going to go over some of the best kept secrets to helping you get licensed. And we're going to start with 100 questions for an insurance license. The goal of this is you understand how to answer questions the best way possible. Now, if you watch any of our other videos, then you know I've been going over some great topics, but I figured might as well bring the licensing queen herself. So up next, I'm going to have Regina go over some of these questions so that you can get the best thing possible. You can get the answers that you need and pass that exam on the first go.
Welcome. I'm so glad that you've chosen to join us. Like we said, I am the licensing coach. I've helped a lot of people pass their insurance exams, so I feel very confident that I can give you really great information that'll help you to pass your state exam. We're going to review some of the questions that you're going to see on the exam, and I'm more than happy to help you learn ways in which you can think about how you need to approach studying and also the best way to answer questions and get yourself licensed. All right, so let's start. The material you see here is some of the information that we share with our students, and it helps them to really put everything in a concise location in order to study. But what I'm going to share with you are some questions and answers that show up on the exam. So the first one that we see here is a very common question that I tell everyone that there are some courses where you have practice exams, and those practice exams, I've always seen this question show up, and a lot of my students have said that when they take their real exam, they see this question. So number one is the basic source of information used by the insurer in the underwriting process is what? A, the application, B, MIB, C, consumer report, or D, agent's statement. Which one do you think it is? Have you started studying? If you haven't, I'll just let you know now. The right answer is A, application. So the application is the main source that underwriters use, meaning the company, and I'll review what underwriting is here in a question that's coming up soon. They use to determine someone's risk. The main source, or the basic source that companies will use for underwriting is the application. Okay. The next question here is about the Medical Information Bureau. So the MIB is not Men in Black, but it's the Medical Information Bureau, and is a nonprofit trade organization that maintains what? That is the question that's being asked there. So you have to know what MIB stands for, but you also have to know what it does. So A would be motorist information on applicants for life and health insurance. B would be medical information on applicants for life and health insurance. C would be maternity information on female applicants for life and health insurance. And D would be massive amounts of information on the types of policies available. So I think that you would understand that the right answer here is B, medical information on applicants for life and health insurance. One important thing to note is that even though there is a place, basically that MIB, where all of this medical information is dumped into, and all insurance companies use to see if there's any, adverse risk for the people applying for insurance, it cannot be the only way that a company can choose or decide somebody's risk. They still have to take into account that application, and they also can take into account whatever they find on the MIB. All right, number 3, applicants whose health, habits, or occupations make them higher than normal risk as referred to as, so they're referred to as what? So applicants whose health, habits, or occupations make them higher than normal risks are referred to as A, preferred risk, B, inferior risk, C, substandard risk, or D, undesirable risk. Now, like I've told you before, or maybe Luis has told you before, but when you have enough time to read the question carefully and cover the answers to the question if possible, especially when the answers to the questions are short, because if you've studied, the information is in your brain. So you can cover the answers read the question very carefully, maybe 1 or 2 times, and then allow yourself to come up with what you think the answer is in your mind. Once you know what that answer is, look for it in one of the 4 possible answers that you have, and then pick the one that comes to your mind and move on. And that has proven to be very effective and helpful for my students. So the right answer here is that if they have higher than normal risk, they would be considered substandard. So in this case, the higher the risk a person is, the greater the risk it is for the company to take them on as a client or as a person that they insure. So they would be considered substandard risk for an insurance company. Preferred risk means the opposite, that their health habits or occupations make them lower than normal risk, as would be referred to as a preferred risk. But anyway, in this case, the question is it higher than normal? And so the right answer would be C, substandard risk. Number 4, it says changes to a written life insurance application must be A, initialed by the agent only, B, approved by the company's regional vice president, C, initialed by the applicant, or D, approved by the underwriters. So here the right answer would be C, initialed by the applicant. Only the applicant can make changes on an application. It sounds a little strange because really nowadays the applications are electronic, but there are some paper applications, and there used to be mainly paper applications. So just for you to know, you cannot white out or you cannot white out or erase anything on an application. And if any changes need to be made to an application, it could be, you can strike through and have the applicant initial that change, not the agent, okay? So let's keep going. Let's see what else we got. Which of the following best details the underwriting process for life insurance? Which of the following best details the underwriting process for life insurance? Evaluation and classification of risks. B, selection and issue of policies. C, selection and classification of risks. Or D, selection, reporting, and rejection of risk. Which one do you think it is? If you chose C, you are correct. The right answer is selection and classification of risks. So basically, in the underwriting process, the company will look again at that person's medical history, their current medical condition, and select what risk they are, classify them as that risk, and then that's what determines what a person's premium will be. Okay? Remember, the types of risks are preferred, standard, and substandard. Preferred, standard, and substandard. Preferred gives you the lowest premium, standard gives you the standard premium, and substandard would give you a higher premium rate. That was just a little extra information for you to prepare for your exam, okay? You're welcome. 6, which of the following is the effective date of coverage for an applicant who has been issued a conditional receipt? I'm going to read it again because I want to model how you should do it when you take your exam. You can read the question more than once to make sure you understand the question. Which of the following is the effective date of coverage for an applicant who has been issued a conditional receipt? So is it A, the date of application, or the date of the medical exam, whichever is later, if the applicant is insurable as applied for? Is it B, the date the producer receives the policy from the insurance company? C, the date the insurer receives the application? Or D, the date the producer delivers the policy to the applicant? So the right answer here is A, the date of application or the date of the medical exam, whichever is later, if the applicant is insurable as applied for. So what that means really is that a conditional receipt is what a person receives when they give initial premium with their application, when they to their agent. So once the application is completed, they give the initial premium to their agent, and that means that now that person is conditionally covered. If the person were to pass away in between the time that they applied and that they're waiting for underwriting to be completed, that person would receive the full death benefit if the applicant, that's why this last part is here, okay, look at answer A, if the applicant is insurable as applied for. So if the person was not insurable as applied for, meaning they found that the person had a lot more medical issues than they told their agent about, that, more than they would have applied for, and in reality they were not insurable, then the company would just return that initial premium to the family. But if they were insurable, then the entire death benefit would be paid out because they received that conditional receipt. But the right answer always is that conditional receipt begins, or that coverage begins, on the date of application or the medical exam, whichever is later. That's really how you have to remember it for the exam. Okay, number 7. When is a producer required to obtain a signed statement of good health? A, at delivery, if the free look period begins at the time of delivery. B, at the time of application, because the producer is the field underwriter. C, at the time of medical examination. Or D, at delivery, if the application was taken without payment of the first premium. So the right answer here is D. D is the right answer. You only need to obtain a statement of good health signed by the insured at the time of delivery if the application was received without payment of that first premium. If the application is received with the first premium, then the person gets a conditional receipt, but they don't have to sign a statement of good health upon delivery. Okay, so only if no money was given, basically. With the application, does an agent need to obtain a signed statement of good health when they deliver the policy? All right, number 8. All of the following statements about insurable interest are true except. So here we finally get to practice on one of those except questions. You'll see them a lot on the exam. Don't get too nervous about them, but you do have to pay a lot of attention when you see an except question on the exam. Sometimes, depending on where you are, what state you're in, the testing center will give you like a laminated paper and a dry erase marker, and you can write on that. And when I tell my students, if you see an except question, write the word except on your paper, and it helps you remember that you need to look for the lie. You need to look for the false answer, because that's the right answer in an except question. So let's read this one and find the false answer. All of the following statements about insurable interest are true except A, a husband and wife have insurable interest in each other. True or false? That's how you have to look at that one. B, and you can write down if you think A is true or false, right? B, a creditor can have an insurable interest in a debtor limited to the amount of indebtedness. C, an insurable interest must exist at the time of the claim between the beneficiary and the insured. D, people are considered to have an insurable interest in themselves. So you would have to look for the lie. And here, the statement that is false is C. An insurable interest must exist at the time of claim between the beneficiary and the insured. That's not true, although it sounds like it would be true. But if you studied, you'll know that that's not true. The truth would have been insurable interest must exist at the time of application. That's a true statement. But insurable interest does not have to exist at the time of claim between the beneficiary and the insured. So here, the right answer is C, because C is not true. Okay, so it's a little convoluted, but when you see those questions, make sure that you pause, that you take your time, and that you label each question true or false, basically after you've read the answer, so that you can find the one that's false and then choose that as the correct answer. All right, number 9. When must insurable interest exist? I just gave it away. Please tell me that you just answered that question correctly. A, at the time of application. B, death proceeds become payable. C, when the policy ownership is transferred. Or D, when cash values are borrowed. The right answer, if you were paying attention a second ago, is at the time of application. The only time that insurable interest must exist is at the time of application. Let's keep going. We're almost done. I'm going wrong, the wrong way. Here we go. A statement on an applicant for insurance that is believed to be true to the best of one's knowledge is what? Let's read it again carefully. Remember, you have time. Always try to keep you calm. Read carefully. A statement on an applicant, or really on an application, I guess that's written incorrectly, for insurance that is believed to be true to the best of one's knowledge is A, statement of fact, B, opinion, C, representation, or D, warranty. The right answer here is C, representation. Representations are the answers on an insurance application. And what the definition for representation are statements that are believed to be true to the best of one's knowledge. So that really just means that you probably believe to the best of your knowledge how much you weigh or that your health is pretty good, but you don't 100% know if it's true at the moment that you're applying. Unless you had a medical exam done and the results, the day before. You could be pretty confident in what your medical condition is, but most people don't know that for sure. So the answers on the statements on an application are called representations, which are believed to be true to the best of one's knowledge. All right, awesome. We're doing great, and I think we're almost done. So let's look at 11. A statement of fact on an application that is guaranteed to be true is what? A, a warranty, B, a representation, C, a waiver, or D, ambiguity. So what did we see a second ago? A statement that's believed to be true is a representation. So B can't be the right answer. A waiver has nothing to do with it. And ambiguity doesn't sound like anything guaranteed, does it? So the right answer is actually warranty. A warranty is what's considered to be a guarantee. So it's pretty easy because they kind of rhyme. You'll be able to remember warranty equals guarantee. 12. Which type of policy is an arrangement where someone with no relationship to the insured persuades the insured to take out a new policy and then sell the policy to an investor for profit when the insured dies? So let's see. A, variable life. B, index life. C, survivorship life. Or D, STOLI. Now, here, it's a very long name for this policy. That's why it's short on here. But the right answer is D, STOLI. Anytime you see a question where it's saying that there's no relationship to the insured, but then a policy is taken out, that's where you know it's, in this case, the STOLI stands for Stranger Originated Life Insurance Policy. So if these are rare and usually, this is the only case in which there is no insurable interest, but this policy would only be able to be taken out to be sold to an investor for a profit. So if you see that, then it's STOLI, Stranger Originated Life Insurance. All right, next we have 13, which says, which part of the application contains the applicant's medical information and medical history? So this is one of those questions that actually shows up and it's super easy. I tell people easy points. You need to memorize this. You're going to do great. If you can memorize this, you should be able to. So part 1 of the application is general information and part 2 of the application is medical information. That's it. That's all you got to remember. And there's also an agent's report, but that's not considered really part 3 of the application. Anyway, so based on what I just said, we know the right answer is B. The part of the application that contains medical information is part 2. 15. The federal law that permits an applicant for insurance to question the validity and source of any credit information is called A, Medical Information Bureau Disclosure Act, B, Medicare Act, C, Equal Opportunity Finance Act, or D, Fair Credit Reporting Act. So anytime you see that it's saying any source of credit information, it's called the Fair Credit Reporting Act. That is the federal law that is asked about on the exam. It's one of them. I think there are a couple more. The next question. In the formation of a legal contract, each party must give something of value. Under contract law, this is referred to as what? A, adhesion, B, indemnity, C, consideration, or D, agreement. The right answer here would be C, consideration. Like I tell my students, where you see that it says something of value, on the exam, something of value really just means cash. And cash starts with the letter C. So when you're seeing questions about each party must give something of value, usually the right answer is consideration. Just like something of value means cash, the word consideration starts with the letter C. That helps you remember consideration, something of value, which means cash, that goes together. Hopefully that helps you. Which element of a contract law requires the contracts not go against public policy, must have insurable interest, and must have the consent of the proposed insured? So let's read it again. Which element of contract law requires that contracts must not go against public policy, must have insurable interest, and must have the consent of the proposed insured? Is it A, acceptance, B, consideration, C, indemnity, or D, legal purpose? The right answer there is legal purpose. Anytime you see that it says not go against public policy or must have insurable interest, that helps you know right away that legal purpose is the element of the contract law that the exam is asking you about. The term that refers to unequal exchange of values given between the two parties in a contract is what? A, aleatory, B, conditional, C, adhesion, or D, avoidable. Only 3 of those are actually something you'll see when you study. But the right answer there would be A, aleatory. An unequal exchange of values given between two parties in a contract is aleatory. 19. A legal contract in which only one party makes a legally binding promise is what? A, adhesion, B, conditional, C, unilateral, or D, aleatory. We just saw aleatory before, and that's not the same definition, so we can rule that one out. But here, something that helps is when it says one party makes, so one, like in Spanish, uno, and here we see uni, okay? Unilateral, it means just one way. So only one party makes a legally binding promise. The right answer is C, unilateral. Keep in mind that sometimes on the exam, they'll reverse this and they'll ask which one of these is a unilateral contract. And then they'll have several answers that say only one party. You have to know that the right answer is only one party makes a legally binding promise. That will be the entire correct answer. All right, last but not least, the element of a contract that is to prevent people from taking advantage of minors or the insane is what? A, offer and acceptance, B, competent parties, C, advice and consent, or D, legal purpose. The right answer here is B, competent parties. An element of a legal contract that involves competent parties means that you have to be of legal age to be able to enter the contract, not under the influence of drugs or alcohol, and of sound mind in the moment, when you're entering into an insurance contract. So those are some questions that should definitely help you to pass the exam, to keep studying and keep going. And if you want to learn more, make sure that you check out our free packet that we have for those of you that want to keep on getting some good information to help you pass your exam. I hope this helped, and you're going to go right back to Luis to give you the rest of the information.
All right, so that was 100 questions for the insurance license. She did an awesome job. I think you're going to love the results that you get from this. And I just want you to know, if you want to know exactly how to get your license and on the first go, I want to make sure you grab our free licensing coach pack. It includes a 10-part course where you're going to learn all the steps that you need to take to get your license, a licensing checklist, which gives you step-by-step instructions on what to do, a cram course PDF, which Regina went through in this video, a practice exam where you can go through, and we when our agents get that exam and they get a 75, we know they're going to go pass the exam, and then a recording of Regina doing her entire cram course. So that's you. Go to the link below and grab it, and we can't wait to see you on the next video.